You take that with both hands, right?
Absolutely. Well, it's a catch-22 situation, though, when it comes to the BFSI sector. While the sector is underperforming, valuations are in favor. Nigel, what is the data?
We briefly had a chat with Pankaj Tibrewal earlier in the week, and he made this point that yes, BFSI is underperforming, but actually valuations are in that favor. So let me go to the wall and discuss that in greater detail. So the BFSI sector on the whole, it appears it's a bit of a catch-22 situation because the stock prices are underperforming, but valuations, well, they appear to be supporting as well. So let's run you through a couple of data points. Off the 52-week highs, the Nifty has lost close to around 5%, but the Nifty Bank is down close to around 8%. We look at the Nifty and we say, hey, it's not trading too expensive. On a forward basis, it's trading at around 17.5 times, depending on what you're looking at. But beneath the surface, if you look at the ex-BFSI universe, it's trading at all-time high in terms of valuations. While for the BFSI universe, well, it's trading at pretty much in line or maybe a little lower than the long-term averages and maybe at similar levels that we saw pre-COVID as well. And despite the fact that things are looking up. Loan growth, well, mid-teens. If you're looking at capital levels or provisioning buffers as well, they're pretty much quite adequate. And also, if you look at the ROE, ROCs as well, ROAs of the company, the return ratios in short, they're at multi-year highs. And we've seen quite a few managements who joined us on the channel in this week itself. And besides all of that, still valuation-wise, well, the banks are at a big discount in comparison to the ex-BFSI space. So I said, let's focus on two indices. Within the Nifty, if you segregate it between BFSI and ex-BFSI, ex-BFSI is trading at a 34% premium in comparison to BFSI. You'll see that's only for the Nifty. So let's look at the NSE 500. If you look at the premium out there between the ex-BFSI and the BFSI, well, that's reached close to 90%, and we haven't seen that in a very, very long time as well. And, earnings could be tweaked back, particularly for the ex-BFSI. Because you look at it, from June itself, earnings have been tweaked on the downside for IT, chemicals, FMCG. While the lone rangers are BFSI and auto and ancillaries, where you're seeing the EPS estimates have actually been marginally up. Short point is, let's just get the valuation chart for you of some of these banking names on a price to earnings or even a price to book basis. They're pretty much in line with the long-term averages. Which way is it going to swing? The stock prices have been under pressure, but valuations are giving them some support, which will keep investors enthused as well. Let's get Andrew's view on